Epstein, and here we are with the SPDR-ETF stock market wrap-up. And this is for post-July 4th. It is July 8th, 2024. Hope you all had a great holiday. I did. I saw the NASCAR race yesterday, loved it. Watched the F1s in the morning. I'm a car freak. And having a ball with all that. You know, it was fun to see it. And it's a beautiful venue for Chicago. Although I don't think the crowd, they don't have enough crowd. If I'm NASCAR, I don't think I'd come back here to do that. I think F1 would do better, frankly. All right. So as we look at what we've got here, the first thing that I want you to consider is that my sale ends today, July 8th, at 11:59 p.m. Central Time. So if you're watching this and you're still in July 8th, you can take advantage of the sale. You don't need coupons. It's 35% off any of my courses or the research, especially if you upgrade, if you're a current subscriber. I think you'll find what that does in a neat way. It's on the website at iraepstein.com under courses and under research. I really talk about how you make trades. I show you what and how. I show you the indicators I use. I teach you the indicators I'm using, why I'm using them, and I'm pretty happy with how it's been doing. I even had a client just ask me, would I put out at the end of my video for the spiders what I said that day in terms of buy here, sell there, just for that day. It's a pretty good idea. I don't know why I didn't think of it, but I give them all the credit. And yeah, John, I think I'm going to go ahead with it. The more I thought about it during the day, buddy, I think you're onto something. So I'm going to look into it and try to develop it as early as tomorrow. Not in the morning, but if I can get it done by the afternoon, I got to figure out how I get it done. Away we go with that. So we're always looking for something. All right, in terms of news of the day, let's get over here for a minute. Redbook Group's going to come out with retail sales. They've been slipping week by week. For a while there, they were over 6% week over week, and now they're not. They're back into the high fives, but slowing down. You see that. Fed Chair Powell's going to have his first of two meetings on Capitol Hill. It's the semi-annual monetary policy report he has to deliver. You know the questions are going to be, when are they going to cut rates? Doesn't he think he's being too restrictive? The economy's going to weaken. He'll give the same answers he has. Labor's getting back in balance. It's not out of balance the way it was. Inflation is slowly coming down. They'd like a bit more data before they make a decision on what to do. I've given you the synopsis, okay? If he deviates, I'd be shocked. Number two, you think he's going to say, no, we've changed. Senators, don't worry about it. Don't even ask. We're going to cut rates in July. That isn't going to happen. API, they're coming out with their numbers at 3:30, and the EIA, right at the same time, is going to release their short-term energy outlook report, and that comes out at 3:30 as well. And by the way, today in a White House press conference, the press secretary did announce that all of the 1 million barrels that the Biden administration wanted to release in front of July 4th were released, and that tempered the restraint upward in gasoline prices. I agree with that statement, okay? Didn't break the market, it just stopped it from running very high. Federal Reserve U.S. consumer credit came out late in the day. This is a huge number. The market in April was 6.4 billion. You're up to 11.3, basically doubled the amount. The market was only looking for an increase to 8 billion. Now they're at 11.3. The consumer must be strapped. They're doing something that's pretty wild. Now, I don't know if you were watching the press conference as it was going on, and it was interesting. It came out by one of the reporters that the president has been seeing a doctor over the 8 months, past 8 months, every month, a doctor who showed up. Now, do we know if he's seen the president? They're dodging that. What is he a doctor of? Parkinson's disease. I don't know who has it there. I don't know who the doctor's visiting, nor did they spill the name of the doctor. But now that it's out like that, you know the reporters are going crazy to figure out who he's saying, blah, blah. I'll let it go at all that. Biden has his hands full. He's got NATO members in. He's got to convince them that he's still up to the task. He's got to convince his own party that he's up to the task. He's going to hit the road. if he's talking off cuff, off teleprompter, and that's what he has to do to win over people, will he goof up again? That'll be the biggest question. And he's challenging Trump to go out there. Trump is brilliant in this way. He's not going to do anything wrong right now. He'll play a little bit of golf. He'll go to a fundraiser or two. He'll let Biden have to fight this out. He's not going to take any attention away from President Biden while both feet are in the fire, all right? And as soon as the time's right, this is still July, he'll step out and do whatever he has to do. It's turnaround, because for months on end, it was Trump every day on TV with the trials, and Biden didn't want to step out and do anything wrong about that. It just flip-flop, guys. This is dirty politics at its absolute worst. When you take a look at all the stock indices, we have an event happening. We have 3 events that you have to pay attention to. You have CPI on Thursday, PPI on Friday. Those numbers have to come in steady to weaker to make June go into the record books for the Fed as a month of weakening. I predicted that they need 3 in a row, and they're going to be happy to cut. So we will see if they get that. If these come out that way, June goes into that record book that way. That's number one. Then you've got to be looking at corporate earnings. They start on Friday. Boeing, you know that they accepted the deal. I told you that once that deal was made a week ago, how could Boeing say no to this deal? I mean, for all purposes, at the worst, they're probably out $750 million. That includes fines, that includes monies they have to put up in order for 3 years of inspections and so on that'll be there. They have the government on them, but they'll get some waivers. They'll still be able to do, in my opinion, military contracts, especially with the war raging in Ukraine, and we have to send armaments galore, and who knows what kind of planes and so on will be needed down the road. So you got to pay attention to that. Plus, there were 170,000 potential workers that a good chunk could have lost their job in a prolonged trial, where if they got fined $25 billion, what does that do for them? The balance sheet destroys them. So a smart move. The people that have family that were lost still have their civil case rights intact. They will go after Boeing for other monies, but those won't amount to that kind of money. So I thought it was a good move, and I thought that was the reason the stock market was up. Boeing was up early on, about $5 today. Nvidia came back a little bit, okay, but I like that Amazon's down and Netflix. I want them to fall here. I, for one, would love to get a 5 to 10% correction in the market to buy it going into year end, all right? But we got to hope we get that summer break. Boeing, as you can see, got to 191.50, and it gave that up, and it should have, all right? This was not unknown, all right? I had been talking about it with you every day. AMC, the mean people are back. They're buying that company. I hope they drive it up high enough for the short sellers, because what's helping is the kids' movies are big hits right now. So that is the good news for them, and they buy the candy. And if you think candy isn't how these companies make money, boy, are you wrong. They want those candy and drinks. Salt them up, make the kids drink. All right. I've decided to cover GLD. We haven't done that in a while. And as you could see, this chart does get gaps in it all over the place. It is the nature of this. Why? Because the futures market, which it is based on, completely based on that. Got it? By the time this market opens, you've had pretty crazy moves. Futures open at 5 at night and trade 23 hours from basically from Sunday night when they open at 5 until Friday at 4 p.m. So you get that if you get big moves and world events happening. It's the nature of this beast, because it's not a 24-hour trade or 23-hour-a-day trade. The trend is up with higher lows, higher highs on the swing line. Now remember, this number is an index I created years ago to make it easy for you to see, gee, if I were going to come in and buy a 217.41, what number would I need as a stop that would break the pattern, just the pattern, of higher lows, higher highs, which is a bullish pattern, and you can see it be getting under 214.49. The next thing that to me is super important is the 18-day average of closes. I call that the line in the sand. It is where a market likes to return to see does it have the strength to continue an uptrend or get under it and have a downtrend. But that's a number you often fight at for a bit, fight at for a little bit. I can go on and on, fight at for a bit. Important number. When we come over to Bollinger Bands, regardless of the gaps, the theory holds. When you get to a band, if you're not embedded with the slow stochastic, and the first time you hit it, the pros generally, in my opinion, are taking the money off the table on the upside or downside. Neither were embedded. So I paid great attention to that. And then we go to RSP. So again, while you're looking at new highs in the S&P, on the weighted S&P, which are the typical futures and all that you see on all the stations, when you get to the equal weight, you have nothing like that. You have a market that's actually been selling off, hasn't gone back up for a high since April, and it's on the verge, if it were to get under all this with sideways action, could get a bit bearish here, even more so. So you got to be careful with what you got right here. Nike, I'll be dropping soon. This big break means they have a lot to recoup. It could take a quarter, 2 quarters before it really becomes an interesting chart. The fact that it didn't even make a run to fill that right away, I think it's not worth watching, so I'm going to get rid of it. Rivian, you know I like the stock a lot. I've made commentary about it. They have the money. They're going to have the funds now. They got the production plant. They got rid of going to Atlanta at this point. I think it was Atlanta to build their other plant. They save all that money. Their new plant is up, about running from what I understand. We should see production numbers soon pick up to make the cars less expensive. And that's everything in this game. I read an article today that if you want to go out and buy a used electric vehicle, in many cases it is now cheaper than the internal combustion engine for basically the same car. The article was on the Ford F-150 truck. It was fascinating to read how people have bought them. They paid premiums, and now these cars are depreciating very quickly as people either they're not so enamored with it anymore. They still have the anxiety. I don't read everywhere that there's charging stations. I am going, for example, 2 hours outside of Chicago. I have a friend that is going for the world speed record in his Lamborghini from 0 to whatever speed he could hit in a half mile. He's already hit 259 miles. That's 0 and a half mile to that. And he has to break over that to get the world record. And it is a Lamborghini. It's been thoroughly reworked. The engine block, the transmission, it's a Lamborghini body and all that. It's not a funny car. So it'll be interesting. So a group of us are going in August. I'm a car freak, so I do all these nutty things anyways. But my point is, we are debating who should drive because I've got buddies that have electric cars, and the first thing was, I don't know where the charging station is. So I said, well, we can get a map and take a look. Well, I wouldn't mind taking it, but I'm a little nervous. It's exactly the conversation yesterday morning at breakfast with my buddies that we're all going to. It's one of my friend's sons that has got this car. So gives you the idea, and I think that's still the problem with these. And don't get me wrong, electric sales are growing. They're just a small part of the market right now in America. If we had the charging stations everywhere, if there were a charging station, I think, in every gas station, where there's, if you could pull in and charge your car electrically, I don't think we'd have this problem. Interesting, isn't it? But it's a lot of money to put those in, and you got to bring in the electric grid. It's not cheap. Lower low, higher high. You can see you're overbought, so I'm not seeing anything in Freeport here other than a neat rally. Copper came alive. It carried it with it, but you're probably at a zone where you've got to be a bit cautious here. Menar's still in big trouble. Embedded reading, now the market's got to fight to prove it can get back over this 200-day average and the Bollinger Band. That's going to be your battle. If it can't, it can even sink lower than this. Housing, the home builders, well, you see they're looking bad. Are you going to lose the embedded reading by this closing over 21, or are the pros going to sell it here looking for it to come down? I think they'll sell tomorrow if the market's steady to higher, as long as the embedded reading is in place, thinking it can still fall. Why bounce it? They're all hoping that the Fed chair will say something. So I don't think you have your orders in ahead of time. I think it's one of those you look at a little bit during the day. XLF, higher lows, higher highs, but you keep hitting the upper Bollinger Band. You will stay within Bollinger Bands 95% of the time. Eventually, all this sideways action is going to lead to a very big trade. Think of this as a pipe, and inside is a spring winding itself. It hasn't broken out up or down. You normally get trends, be they up or down, they do something. Not this long, this sideways. So something is brewing in this market. And until it closes under the 18-day average, your bias should be to the upside, but you're at the upper Bollinger Band, and that the word says, until you're over it, you're not over it, my friends. Try to figure out a trend here with lower lows, higher highs. I don't see one in XLI. In the energies, well, Hurricane Beryl didn't do enough damage in the Gulf and into Texas in terms of production of oil and gas. And that is weighing on the market right now. You had your rally into the hurricane time, and over the weekend it hit, came in as a Hurricane 1, which is helping, but still damage to the people that live down there. So my heart goes out with them. I owned a place, my wife and I, we had one in Miami. So I know what flooding can be like when it gets really bad in these storms. But Texas is a whole different level of flooding. But at least they build places up on stilts often. They don't do that in Miami. So we'll see what happens there. GDX, all right. So I'm covering GDX instead of gold because it's overbought, and I want to still stay in that. When I get rid of that, I'll put back GLD here. Silver market, you can see lower low, higher high, just bouncing around, straight up moves up and down. Same in copper. It recovered beautifully, got up to the Bollinger Band. It's probably going to get thrown back here. I can make an argument for the 18-day average to get back into that zone. In TLT, which way now? What's the Fed chair going to say? What CPI, PPI? The trend is down. The battleground should be trying to hold the 200 and the 100-day average. If you can't hold them, I think you'll go back here. In order to just negate the downtrend, you got to get back over 93.77. That doesn't turn the trend up, it just negates it. I think the pros are sellers in these markets. In the dollar, it's still looking to me bearish. You're under the 18-day average, the trend is down. You'd have to get over that part of the market in order to say you've negated the downtrend, but you're very oversold. You're already in readings under 30. I teach you don't deploy new money to the short side when that occurs, and it's the same when you're overbought. You don't do it the same way here, and I have been bullish this, and you've hit my targets now, so we'll see where the markets go. Remember, the sale going on ends in just hours. iRapstein.com, or move your cursor to the top there and go to the website. I'll catch you all in the morning.